Hey, this is Kevin, and this is my first video on dividend investing. But before we dive into the dividend dashboard, I thought I'd just show you some definitions here, and you can refer back to them if you need to. This is my dividend dashboard. I just threw together some charts based on data from other sheets that I'll show you momentarily. The main thing is the expected yearly dividend income. The initial investment is $100,000, and so this looks like a little over 6%. That's what I'm expected. I've threw together other charts, dividend income, monthly dividend income. There's zero right now because January typically doesn't have a lot of dividends from companies, and plus I got the stocks in January, so it's past some sort of deadline to get dividends. I threw in some gains charts here and here, and you can see just 1 month we've already gained $1,600 plus on the stocks, but just 1 month up and down. The goal isn't really to grow the stocks, although that's great if they do. The main goal is to get this dividend income to support ourselves in retirement. Well, let's take a look at my initial investment. I had a mutual fund I was selling, and I was interested in Verizon because it had a good dividend. So I bought that. And then I had a bunch of cash to buy stocks with, and I just went a similar amount to every stock, and what was left over I put into this SCHD dividend index fund. And so that really accounts for over a third of this portfolio. You'll notice $100,000 seems suspiciously round. That's because these aren't the actual shares I bought. I bought more, and I did some math to reduce it down so that this number is really easy to comprehend. If this number's too big for you, just pretend there's not a zero at the end, and it's 10,000. So that's the initial investment. Let's take a look at each of these stocks in detail. The P/E ratio of all of them is 21 or lower. That's a good thing. The payout ratio, everything's fairly reasonable. Let's go through them one by one. ABR, this REIT, is 11%, which is quite high. Although REITs seem to have a higher dividend yield. It might be a little more risky, but then I've got this XLRE ETF. So that has lots of REITs, so that's going to be probably a little more stable, perhaps to offset the risk of the ABR REIT. Most importantly, the SCHD is an ETF at 3.3%. Since it's an ETF, I expect that to be somewhat stable. So for my other dividend stocks, I'm not looking for anything below 3.3 unless I think maybe it's going to have a better growth potential. For instance, Amgen is a little lower, but that's a leader in the biotech industry, so that's probably a good thing. Similar to AVGO, semiconductor, similar to Merck, a big pharma company, and RF Finance. Some of these, like biotech, semiconductor, finance, big pharma, I hadn't had those in my overall portfolio yet, so this is a good balance. These three here are shipping companies with very high dividends, and that's the really risky part of my portfolio here, and I'll get to why later. Obviously, a high dividend seems risky because who knows if that's going to be maintained. That's pretty high. If it were a great stock and if we really love this, they'd buy it up and then the dividend would be much lower. So what's going on with that? And also the P/E is very low on these shipping stocks. JEPI is an income ETF. That's a little risky because it's a little new, very high dividend. So we'll see how that turns out. Verizon, I mentioned that before, very high percent, a leader in telecommunications. So that seems like a solid thing to do. So that's the data from early January 2023. I should mention there's expense ratios with ETFs, but they are very, very low. This one's, I wouldn't call that high. It's higher, but offsetting this 12%, it seems like quite a bargain. What I'm going to show you now is some screenshots from my E-Trade account. For each stock and ETF, I'm going to show you analysis, research, and technical research, and dividend history. In ABR here, we see we've got a strong buy for one of them, some neutrals, and a long. Not great, but the dividend history is pretty good. It's pretty consistent and going up. That's what we're looking for. Amgen, it's got a lot of buys, and look at this dividend growth. That is great. Notice they dropped a dividend quarter in 2020. That's somewhat typical. Looks like we had that in ABR as well. Amgen had that. Here we go. AVGO dropped a quarter in 2020 as well, but analysts seem to love this stock, and as well as the technical research. Here's the shipping. They've only got 1 year of dividends. That's the risk. It's a new stock for dividends. It's got some research and some technical analysis looks good, but of course 1 year dividends. Who knows? Same here for its competitor shipping company, and then this is a ship leasing company. Similar again. JEPI. It is a bit new, just 2 solid years of dividends, so we'll see how that goes. Merck, look, it hits all the greens here, and it is slowly gaining dividends, and it didn't drop a dividend in 2020. That's a really good sign. It's a strong company, of course. It's a medical pharmaceuticals, so. RF Finance, a lot of positives here. Neutral on technical research, which is just looking at the charts. But its dividend growth is really good here, really good, really consistent for a very long time, which is true for most of the stocks I picked here. Here's an ETF. Morningstar seems to love it, and the growth is great for the dividends. Same for Verizon, very consistent increase in dividends, and the analysts seem to love it. And the final one is an REIT ETF. Morningstar loves it. I'm not concerned about the choppy dividends because REITs are a bit different. They have to give dividends that's like 90% of their profit or rather, something about like that. So that's going to be up and down, but it's fairly level though. What we have here is a dividend schedule. I can go into E-Trade and it lists the estimated income from dividends, and I just typed all these in. So it's very straightforward. We've got nothing in January because I bought the stocks in early January, and so it wasn't early enough to get any January dividends. But you can see when you see 4, that's quarterly dividends, quarterly, and this one's monthly. Most of them you can see are quarterly. And the green are ones that have been announced by the companies, and the blue have been estimated based on previous dividends. So most likely they would be the same or higher. And so we've got a total here of 6,256. And our stocks started at 100,000, so that would be 6.2.5% if everything turns out well. I do have some other stocks that aren't included in this portfolio. These stocks were purchased, some of them a long time ago, and not with dividends in mind. So that's why I'm just keeping the purchases in January 2023 in this dividend dashboard. You can see I've got Apple, Dow 30, S&P 500, eBay, Microsoft, and Starbucks. In fact, Microsoft I bought way back in the 90s, and they did not have a dividend back then. So these aren't included in this series of videos. Hopefully, we'll have another video at the end of February.